Hey, this is Justin with DayTradeTheMarkets.com and DailyMarketAssistant.com. And in the video today, I wanted to take a look at the way that we talk about bigger picture key levels or key levels of support and resistance, bigger picture, and how to make sense of those, whether you're swing trading or whether you're trading throughout the day. So with the Day Trade the Markets software, we're looking at various pieces of evidence, including these bigger picture levels of support and resistance. And then we're also looking at some real-time order flow, volume, velocity, range type data as well to make sense of what's going on in the short term. But bigger picture, we want to look at some key levels. And with that said, we've got a couple of ways that you can do that. One is we include that with our software for the ES especially. But if you're interested in that service alone, or if you are interested in looking at this for multiple markets, you can go to this website called DailyMarketAssistant.com, take a free trial, and you'll see various, we look at a lot of different markets, the index markets, gold, crude, some European markets, a lot of ETFs, and that sort of thing. So I wanted to show you that and then talk about, for example, today, heading into today, so it was posted prior to today. Just look at the ES because that's what I look at the most, but the same idea applies. Let's look at how we would make sense of this if we were looking at it before the day. So heading into the day, we'd look at our, especially if you're a day trader, you'd look at this day trading directional bias, and you can see that basically the market's sideways, meaning that the market would need to break above this level 1841 or break below this level 1828.50 and hold there to really sway the bigger picture bias one way or the other. But if that, when the market is sideways, then we're looking to potentially be a seller in this level, potentially be a buyer at this level, or at least avoid being a buyer here and avoid being a seller there until the market proves otherwise. We also want to look at some of these other key levels to monitor. And so what I certainly recommend doing prior to the day starting is, marking this stuff down. So I've got the first half of the day here noted, but this 1841 level, the market could really get some traction above this level, then we would consider our bigger picture bias to be more up. If the market could get below this level 1828, we would consider our bigger picture bias to be down. If we're in between these two levels, and we actually opened above this, but if we're in between these two levels, then ideally look to be a seller in this area and look to be a buyer somewhere in here or here. Okay, so just talking about how we look at that bigger picture. So if we kind of go back in time and look at what's going on early in the day, we had other levels, 46.50 with the next level to look above that, and then we want to see what the market would do around 1837.25, and then again at 1823 or so. So those are some levels that you just want to mark on your chart, and you can see that prior to the, when the day began, we opened above this 1841. So we wanted to see what the market would do when we tested there. And you can see it tested the tick and then had about a 3-point move higher, but couldn't get any traction really above that, couldn't make a new high for the day, and then couldn't stay there for more than 45 minutes, which is a general concept that we just like to see that the market's really putting in some true acceptance above there. And then you can see when we tested again, we broke right through that 1841, and you can see when we took it out, we did so on a level 3 selling aggression bar that had some follow through right away. So that's telling us this market basically failed above 1841, and our next expectation would be to monitor what this market's doing when we get to 1837.75. You can see when we got here that the market obviously had some really quick follow through from this level 3 bar, and then it didn't give us any kind of buying here. We just pierced right through it on that level 2, a couple level 2 selling bars, 3 of them actually. So then we tested right back up to that level and then sold off again. So again, this level we want to monitor, especially the one that I made darker, the 2 darker, we want to monitor that held early in the day, bounced about 3 points, and then didn't hold the second time through and pierced through very hard. The next ladder, I like to look at it as like rungs on a ladder. What's the market do at this level? Okay, couldn't make it to the next one higher. We're probably going to test the next one lower. Okay, what happens when we get to this rung of the ladder? Well, we pierce right through it on some really strong selling. Okay, we're probably going to go test this rung of the ladder. This is a very important level here. Okay, and you can see that we test pretty hard right down to it, but rather than panicking and getting short right at this level, the expectation is that the market should find some resistance here at the 28.50 area, and you can see that the market for about an hour and a half, tried to get going below it, but couldn't do it. And when we tried to make a new low, you can see we got some buying right off the low. We got a deceleration and then a level 2 buying bar, and we're back above it. So again, the idea here is we failed trying to accept above our bigger picture consolidation. We failed when we tried to test below our bigger picture consolidation. So what's the next idea? We didn't get acceptance below this rung of the ladder. We're probably going back up to this rung. Okay, so it's just a way of making sense, bigger picture of what's going on and how to filter out information so that, number one, you have a pretty good handle on which side it makes most sense to be on, and number two, you don't get short. Don't take a sucker trade. You don't get short right at that level. You don't, if we opened below 1841, you wouldn't get long right at that level. You'd wait to see if this market could really accept above it. You'd wait before you get short here, you'd wait to see if this market could really accept below it. So again, it's just one piece of the puzzle. It's one of the ideas of evidence. And when I talk about bigger picture, I'm just looking at it down here. But that's and then this is the sort of thing. If you're interested in that as well, or if you have a method of your own, that's where you make even you drill down and make even better sense of it. But this is just a method or a way of helping you, more of a roadmap, helping you make better sense of what's going on in the market, and so you can kind of keep an idea of, okay, what's likely to happen. We're likely to get support here, we're likely to get resistance there, whatever the case may be. Does that happen? Okay, the market's still on the track we would expect. Okay, that didn't happen. Now we would expect the opposite to happen, and we go to the next level and let's see what the market does there. Just a way of helping you avoid some bad trades occasionally, be a little more confident to get into some more aggressive trades, and just really keep a good feel, a good roadmap for what's going on in the market. So hopefully that made sense. Let us know any questions you have about that, and we'll talk to you soon.